Hey guys, how we doing? So last year I purchased a property with just 1 year's accounts. In 2020, my company mortgage chain was directly authorised by the FCA, who regulate our industry. And I was able to buy a property with just 1 year's trading history, which was through the pandemic as well. So how did I do it? In this video, I'll explain the exact steps I took and how you can do this as well. If you are a self-employed first-time buyer, then this one's for you. Let's go. Hi, my name's Alex Kerr. I'm a qualified mortgage broker and my passion is simplifying the mortgage process for first-time buyers. Let's get into the vid. So the first thing I did was I made absolutely sure that all the money I was saving for my deposit was taken out of my business account and into a personal savings account. I usually did this just after income had come into the business. This was so it was easy to see that I was taking the money for the deposit from the income. Now, if you have had a business loan paid into your account, this could well complicate matters, as the lender may struggle to see the deposit money being saved is coming from your own income and not from the loan. So I would try and avoid getting any finance during the period of saving for your deposit. If you have already done this, then make sure it's clear you are saving from your income. Ideally, on the day you receive income, make sure you put some money from that day aside towards your deposit. Then this makes it clear it's coming from income. The next step I took is making sure I use software that could determine what sort of profit I was making. I used Xero myself and found this to be really easy to use. But a little word of warning, if you do use it, make sure you keep it up to date regularly, ideally on a monthly basis, otherwise you can have a lot of transactions to reconcile. You can connect your bank account to the software, which makes it even easier to pull in transactions. Once you are over the initial hurdle of reconciling all of your transactions, it really makes life easier. I was able to categorise all of my expenses, set a formula so that it took any tax into account, and then run a profit and loss report, which gave me my exact profit. This then enabled me to understand how much I could borrow by using mortgage lenders' calculators. I ended up using Vida Home Loans. However, I do believe their criteria has now changed where you need 2 years accounts. Other lenders who are currently, at the time of making this video, accepting 1 year's accounts include Kensington, Pepper Money, Precise Mortgages, Foundation Home Loans and Aldermore. Coventry Building Society will take your latest year's accounts into account, however you will need to be trading for 2 years. You can also use the Help to Buy scheme if mortgage lenders offer it. Most high street lenders will require 2 to 3 years accounts. The key things really to being successful with 1 year's accounts, I feel, are one, proof of deposit, and making sure this is from a source that's easy to identify and does not come from any loans your business may have taken. 2, that you understand your profit, whether you are self-employed, sole trader, or a director of a limited company. You need to understand what salary and dividends you've taken and that you do not leave your director's loan account overdrawn. This is what software like Xero will help you with. That's if you want to prepare and do not have an accountant that does your bookkeeping. Your accountant can of course help with this, but they normally only do this a little bit before the accounts need submitting, where having your own software gives you a proper insight and helps you prepare much earlier. Finally, having 1 year's worth of tidy business bank accounts without huge expenses and any complications such as change of business names, trading styles, or any unexplainable transactions. I feel these were the 3 key areas that helped me achieve success with 1 year's accounts. Today's question, are you self-employed with 1 year's accounts? Let me know. Mortgage warning. Please note we do need to let you know that your home may be repossessed if you do not keep up repayments on your mortgage. So thanks for watching today's video. I hope it has provided you with some useful tips. Please check out the show notes for a recap with access to any links discussed today. Please consider subscribing and ringing the bell to receive notifications to our latest videos. I've been Alex Kerr, providing the best tools and tips to first-time buyers. I'll see you in the next one.